Good afternoon. My name's Amy Rose. I'm the Managing Director at the Digital Economy Council of Australia, or DECA, formerly Blockchain Australia. Today we are running a 9-hour Global Digital Asset Regulatory Summit. Get your mouth around that, and I'm getting used to it now. This is our seventh or eighth session. At the moment, we are focusing on the Australian landscape. We have covered the Asia Pacific region, the US, and India so far. We just had a very broad conversation about just the general, what's a priority in the Australian regulatory landscape at the moment. Now we're going to dive deep into a really niche conversation, but it's really, really important here in Australia. And there's definitely a divide on which way we're going to go. So I'm going to hand it over to the experts. So we're going to be joined shortly by our moderator, Greg Valles, who is the CEO of Valles Accountants, and he's also a director of the Digital Economy Council of Australia and our treasurer. He's going to be joined by Joni Pirovich, Damian, Lloyd, and Christina Allen. So I'm going to bring them to the stage now. Very excited to hear what these group of panelists have to say. Okay, good.
Hi everyone.
Okay, you all have it.
Hi everyone, I'm really excited to be Chair, Greg Valles. And everyone knows this topic on taxation, one of my favourites. I'm going to start off with Joni. Everyone knows Joni, famous lawyer in Australia, tax lawyer. Joni, I'm going to start off straight off from the hip, from the global macro size and the relationship in Australia with the EU, UK, US, and just run with it to explain the landscape and what you think is important.
Thanks, Greg, and thanks Amy Rose and the team at DECA for organising today. It's a privilege to be appearing here with my peers. So Australia does have a lot of catching up to do. The OECD, which is a global standards body for tax and economic standards, is pushing along with their crypto asset reporting framework. Now, about 140 member countries have agreed to implement the CAF over the next 12 to 24 months. And we haven't seen any specific announcements from Australia yet as to what that implementation would look like. But a couple of the jurisdictions that are moving quickly are the UK and Switzerland, where their draft law is already released and the consultations, at least in the UK context, have already closed. So we're going to start to see what that's looking like and see what it's like to implement CAF. If you're already familiar with the common reporting standard in financial institutions and fund management, then it's not necessarily a hop, skip, and a jump to CAF. There's still a significant uplift involved, but all of that work is going to be done over the next 12 to 24 months, getting ready for it, even if not necessarily legislated in our home jurisdiction or where our crypto businesses are doing business elsewhere and may have reporting obligations. So the US equivalent of CAF is what you may have heard of as the broker reporting regulations, where digital asset transactions on or after 1 January 2025 will need to start being reported by brokers. So the definition of a broker is still quite expansive, but there's particular carve-outs. So if you've got anything to do with the US, definitely reach out to an advisor ASAP. But I would note that there are additional cost-based reporting and transaction reporting requirements that are going to kick in 1 January 2026. So you may not be caught in the next few months, but over again another 12-month horizon that you might have to start thinking about information collection and tax reporting on top of all of your regulatory licenses that you're probably already applying for. So the European Union, they have their equivalent of CAF. It's called DAC 8. And again, a lot of EU member states are required to transpose into their national laws the DAC8 by the 31st of December 2025 for all of the new provisions to apply 1 January 2026 with certain exemptions. So amongst all of that, the overall theme is that there is a significant uplift in expectations and standards around what information crypto businesses are collecting and what they are going to be required to report. These reporting standards are aimed at encouraging tax compliance. In Australia, we know that the ATO has a data matching protocol and it can obtain crypto token transaction activity data from our centralized digital currency exchanges. And in some cases, with information sharing agreements in other countries, they can get the data from other exchanges and crypto businesses elsewhere. So the ATO is already using and wielding those information powers, and they may also expand as a result of the sort of corresponding uplift in recognition and licensing of crypto businesses. So as more of them,
you seeing any of those cases, Joni, in your dealings?
well, from an Australian perspective and an ATO perspective, I am seeing an increase in ATO reviews, ATO audits, and covert audits or desk audits, where the taxpayer doesn't get an opportunity to explain some things that might not look so right or might have flagged risk indicators within the ATO's systems. The ATO is receiving information from certain points. So if there are enough risk indicators, the taxpayer could be on the end of an unfavourable decision that's just immediately handed down and they have to pay tax and penalties or defend themselves as to why not. So there's a suite of different ATO products and tools as to how they engage with taxpayers, some at the more aggressive end and some at the more supportive end, where they're really trying to educate crypto businesses that are maturing and businesses generally. Like a lot of startups go through the exercise of learning the hard way how to keep records and report on time. So all of that activity is increasing. But I would also say, because Australia, we're like a mini US in the sense that we have a lot of enforcement actions going on the regulatory front. So when ASIC is sending out a Section 33 or a notice to produce information or a letter that they don't like something that's going on, and that's a significant threat to the continuity of the business, the typical discussion then is, do I put the company into a voluntary administration or a liquidation? Even if it's solvent, you'll need tax clearance from the ATO. So but by trying to kick the tax issues down the road, the other sort of corporate avenues to give your business a moratorium or some extra time to hibernate and then come back out when there's been enough time to deal with some of the issues.
Perfect segue to a case that you may be aware of, the federal case on the revenue versus capital, personal use assets, the airdrops, DeFi loans. What are your observations on that particular case?
It's ongoing, and it has been ongoing since 2017. That's how long these complex issues take. And we're just at the exchange of appeal statements phase with the Commissioner. A number of those issues are being dealt with in the proceedings. So hopefully by the end of next year, we will get some clarity with a court judgment on staking, DeFi lending, DeFi borrowing, airdrops, as well as simple questions like capital revenue account. You know, can you claim discounts on your capital gain, or if you've made a few very profitable trades, should you be on revenue account and no CGT discount? These are all questions that are part of the proceedings, and I hope to give you a better update by this time next year.
Fantastic. Now, crypto business insolvencies, probably the latest ATO guidance and efforts, e.g. Celsius. What's your views on that?
Yeah, so I have been liaising with the ATO on behalf of about 400 Celsians in Australia that have been affected. I'm advised that general guidance is being prepared, but we don't have a timeline. And actually, I would defer to Damian. He and his team have just had some success with a crypto insolvency in Australia, Digital Surge. So
Yeah, we're
might
going
pass
to
to
come to
Damian.
that. Beautiful, fantastic. What about so the increased reviews, and what are the biggest risk areas you see, or that you're seeing locally and globally for businesses in the crypto world, and in all aspects? I mean, the airdrops, the DeFi, the wrapping, all of the things that, specifically, I don't think government understand the technology or the terms at the moment. So it's part of education. What are you seeing, and how can people placate those issues?
Well, I think we're past the patience of policymakers and regulators to learn the 101. It's now the initiation of fire, where if you have catching up to do, you do it quickly. And that might be in the face of having to respond to ASIC or the ATO, or if the market signals are right and we get some confidence going into the end of the year, to get all of your ducks in the row to launch and service a very good business when times are good and getting better. So whether it's fear oriented or carrot oriented, there's never a better time to just try to dot all the I's and cross all the T's, or as many as you can, especially from a tax perspective.
Just got a couple more minutes, just in the summary of any macro view that you still want to share with us, in relation to what you're seeing.
Oh, I'm seeing a lot of hurt and a lot of pain, and not a lot of nation building going on. So, and that's a particular feature of the Australian environment at the moment. Not only are our tax settings not conducive to innovation starting or staying here, but the prolonged regulatory uncertainty of new supportive policy or an enforcement program which is continues to be educative but not penalizing footfalls. If we can't get regulatory clarity soon, or a more cooperative relationship with our regulators, not just with ASIC, but ACCC, APRA, RBA, good dialogues across all of them. The startups that go to the EU and even the US, and particularly around that Dubai region and the Middle East, they are getting the immediate access that they need, better avenues to capital, and better resources to then fund compliance teams to make sure that consumers are protected. But the more offshore products that are launching and that Australians engage with, the less protections actually Australians have, because those offshore products aren't necessarily built to Australian standards that we know and we love, and we enjoy our consumer guarantees and our rights when we're dealing with financial products. So if we're forced to interact with more financial products offshore, they may be cheaper, but we may not be better off overall individually or as a country.
Thanks again, Joni. Very insightful as usual. Damian, we touched on the digital surge there, and some of the great work that you and your team are doing. Just a segue for you to talk a little bit about what's been accomplished there, and what's the benefits.
Yeah, so for those who aren't aware, Digital Surge is a crypto exchange that unfortunately went into administration around December 2022. And so they service about 14,000 customers. And as part of the administration process, there was a lot of uncertainty around what the tax consequences were going to be. So as part of the administration in this particular case, there was a lot of focus on so when you go into administration and you sign a deed of company arrangement, and it's a process to avoid going insolvent. So you restructure how you conduct your business. And as part of that restructure, there was an introduction of a creditors trust. And so customers of Digital Surge exchanged their claims to their accounts against Digital Surge for a claim against this creditors trust, and there was a lot of uncertainty around whether or not that would trigger a taxing event. So Cadena Legal, myself included, contacted the ATO, and we've been negotiating for about a year now, and it's all culminated to the production of a class ruling, which is a public ruling that the commissioner makes available, and it binds the commissioner to the view set out in that ruling. And what this means in effect is that the tax treatment that's set out in this class ruling, and you're welcome to look it up yourself. It's CR 2024/50, and it describes the tax consequences following the administration of Digital Surge. But in a nutshell, the ATO formed the view that the exchange of creditors' claims against the company for the claim against the creditors' trust does trigger a CGT event. So there's a taxing point in that instance. And then when any follow-up payments to repay the debt are made to creditors, that triggers a CGT event as well. So it sounds like a bad outcome, but practically what happens is when the first taxing event happens, you either get no capital gain, so you get like a nil capital gain / loss, or you get a capital loss. Under the second event, where a repayment is made, you're more likely to get a gain or a net outcome. So the broad effect is that you have a loss on the first event, which is then offset by the gain in the second event. So broadly, the net tax effect is that there is no tax payable. So it's a significant win for 14,000 creditors.
What were they looking at, Damian, if you hadn't have done that class act?
Just uncertainty overall. So they would have had to seek independent professional advice on what their advisors would have thought was the tax outcome. And for 14,000 creditors, like that's a lot of advice, and it's something Cadena wasn't practically able to do. So in this circumstance, going down a class ruling was the best outcome for everyone involved.
Yep, terrific. I know you've been working very closely as an observer of the Board of Taxation and what they've been doing. Where are we with that? You might start off, where did it start and where are we now?
Yeah, so I've just been watching things in the background. Unfortunately, because of my position in the ATO, I wasn't permitted to engage in the process directly. I was involved in the background, but I can't talk about any of that. So in terms of the background for the Board of Tax, and this information is publicly available, the government resolved in December 2021 that the Board of Taxation, which is an independent advisory body for the Australian government, they would commence a review into the taxation of digital assets in Australia. And so that scope of work, like what they were actually meant to focus on, was confirmed in August 2022, and public consultation was held shortly after, I think within the month. So extensive consultation was conducted seeking feedback from tax professionals, academics, crypto exchanges, software providers, and broadly like small and large scale investors. And there were some 40 written submissions that were provided to the board as well. And it was to gauge what the public felt were the key issues in the tax space with respect to crypto. So once public consultation had finished in September 2022, the original deadline was for the board to provide a final report in December 2022. So a very short turnaround for the advice to government. Naturally, the Board of Tax sought extensions out to the following year, being September 2023, and then that was further extended out to February 2024. In early February, the board did announce that it had provided its report to government and specified that whether the report is shared with the public more broadly is ultimately a matter for government. And if you jump onto the Board of Tax website and look into the review of digital assets, you'll find that There's no publication of any of the written submissions, ignoring the ones that are confidential because they're not going to be released anyway. So we don't have any context on what was submitted to the board. We don't know what the ultimate outcome was for the board in the report itself. And it's a really disappointing outcome because you think back to the amount of contributions and the transparency of those involved, the contributors as part of the process. And broadly, none of that information sharing is being reciprocated, which is unfortunate. So I don't think, I mean, it's been 6 months now. And if you look at previous reviews conducted by the board, at least the written submissions have been made public. So it's again, like, it's just disappointing.
I just think that, and I know a few of those people on that board, and I understand the complexity of what we're trying to get here, and what is doable with the government. So I hear exactly what you're saying. Probably a lot on the practicalities of everyone that's dealing with cryptocurrency at the moment, and the data matching and what's occurring with the ATO and the digital exchanges coordinating it and information. We know ATO does a lot of data matching. Could you expand a little bit about that and what it means to people when they're dealing with cryptocurrency today?
Yeah, so similar to what Joni said, the ATO has a recurring data matching protocol where if you're operating an Australian-based exchange, you're providing crypto asset services, and that might be holding it so that you facilitate trades with third parties, then you'd normally be subject to the data matching protocol. So as part of the protocol, there's a little bit more behind it, but exchanges are required to provide a set amount of information with respect to their customers. So it's normally the wallet IDs, transaction information. If you've been onboarding and off ramping crypto, then details around that. If you're undertaking any transactions as part of the exchange, if you're engaging in any other programs or reward systems that are being offered, then that information is generally collected by the ATO. And it's not just that it's being collected by the ATO, but it's also being cross-referenced with information already held by the ATO. So they cross-reference your, if you've provided your name and address, etc., which you would have to do to satisfy your client obligations. Well, exchanges need to collect that information from you to satisfy other regulations. So you provide that information, the ATO then cross-references that with the information that they hold to link your transactions with your tax file number. And so then it's why you generally get the prompts when you go to MyGov and you go through, you're about to lodge a tax return and you get a prompt saying from the ATO, we understand that you're holding crypto assets, just a nudge reminder to lodge. So that's generally because the ATO already holds information that you do hold crypto. So it's important, don't disregard it. They have information from you, so make sure to lodge.
No worries. Thank you, Damian. Again, very informative. Christina, I know you've been travelling the globe and doing a lot of speed engagements in Australia and internationally, and particularly someone who's working with a lot of authorities. What are you seeing out there? What are the observations that you'd like to address?
Lately, what I've observed was that the crypto taxation has lost a little bit of attention around the globe, but still the people who are working in crypto area are very much interested in, resolving uncertainties around tax. In terms of the authorities, I see the shift to the AI focus, moving away from the blockchain, but still there are a lot of significant number of work still happening within the academic community in terms of to try to resolve the inconsistencies between jurisdictional tax systems and some uncertainties about upcoming types of transactions. So
And what do you think is that we've done well, and what things should we work in specifically in the blockchain area, that you want to see addressed? What is it that specifically?
Yeah, so the particular thing that I had in mind to talk about today was the taxation of decentralized finance.
Yeah.
And decentralized finance can be thought as the traditional finance where the financial service function has been democratized by smart contracts. So we removed the functions of banks and intermediaries that provide financial services. And there is a significant tax gap which can arise from the more development of decentralized finance, which I don't think many tax authorities have appreciated to date. I can explain a little bit about why where the significant tax gap arises. So, for example, looking at it from the GST perspective, mainstream financial services are exempt because the value of financial services is difficult to measure on a transaction basis. So financial services are also services. So in theory, we have to tax the services, but the value of transaction services can be only measured at the entity level by looking at the spread between the money borrowed and the money lent, but then we can't measure it on a transaction basis. So we don't actually tax on financial services. If we treat the decentralized finance services in the same way, then that sector will be excluded from the GST net. So we already have a tax gap, but another significant problem with the decentralized finance from a tax policy perspective is the fact that at the moment the traditional financial services income is collected through the corporate income tax system, but the corporate income tax system is fundamentally different from the personal income tax system. And once there is no entity to go after to place corporate income tax on, then we have to naturally go to the personal income tax system, where there are a lot of different characterization issues arising in terms of whether developers are carrying on a business, whether the interest is going to be a debt interest or equity interest. Neither may fit in our DeFi ecosystem. And also it concerns the cross-border situations, and it can raise the hybrid situation, and also the timing of income recognition and the deductibility of revenue outgoings versus borrowings, which is deductible over 5 years in Australia. So Joni briefly mentioned about the reporting requirements as well, and that mechanism goes by the third-party information, but in the DeFi ecosystem, the ethos is that we are removing the banks and financial intermediaries. So we've got no entity to go after. So then we have to think about the alternative forms of taxing the decentralized finance service income by, for example, introducing DAO taxation, so entity level taxation, including a more entity-like organizations within the corporate income tax system, or maybe somehow we can communicate with the financial developers to inbuild a tax system, but that also requires a lot of dialogue between jurisdictions as well as with the developers. And there can be some other mechanisms, such as the some of the proposals suggested for traditional finance sector in the wake of global financial crisis, some of the excess profits tax based on turnover, transaction volume, labor force, none of which has been successful to date, but maybe some of those can be brought back for reconsideration. So, yeah.
No, that's very, very important. I mean, I know that you're speaking overseas and you're seeing a lot of things. What is it that you're speaking about overseas, and what are you seeing overseas when you're travelling with academia and institutions and governments? What are you observing in the digital blockchain world?
Well, so on my last trip, especially to Europe, a lot of focus was on the international tax domain, actually. But what's interesting, though, is that there is a rapid development in the area of GST in terms of e-commerce. And One of them is the platform taxation. So instead of applying the registration threshold, now we are applying the registration threshold to the platforms. And the non-fungible token platforms are well within the GST scope. So if any foreign providers want to bring in their businesses to Australia and provide some of the products to Australian consumers, they have to be aware of the Australian GST implications. And another one is because of the complexities of the OECD proposals for tackling multinationals, base erosion and profit shifting, some more people have started suggesting a different model, such as something based on consumption, and that can well affect the blockchain and crypto transactions significantly.
No, that's wonderful. Look, I'll open it up to panel. We've got a couple of minutes left. Is there anything else, Joni, you want to add to already what's been discussed by our learned colleagues?
Just that on the tax standards work, I'm the regulatory interoperability lead for DAO Star with 80 plus of the largest DAOs in the world. We have proposed, I represented DAO Star in before Japanese Parliament a few months ago and presented a tax standard for auto DPR, which is like the autonomously derived protocol income. And it would mean that you program the taxation of like whatever income a protocol is deriving where you don't have residency or you don't have an entity. And we've proposed a sharing framework as well based on the underlying blockchain and where the validators or the nodes are located. So that it's positive for decentralization and for countries to adopt and support at the infrastructure level, so that they get a share of the tax outcome, which also funds all of the compliance and the supervision of what's going on these chains. And the Japanese Parliament received that very well. So hopeful that more will listen or be receptive to listening.
Fantastic. Damian, do you want anything to add on to that?
Just on the domestic side, I've been not necessarily surprised, but it's welcome that the ATO have been very cooperative in terms of when you ask for help and you're upfront and you cooperate with them and giving information over, then they'll help you understand the tax consequences. In most cases, like I recognize that Joni is also dealing with a difficult case. But in the cases that I've seen, they've been quite cooperative.
Oh, excellent. So, Christina, I mean, again, wonderful that you saw the global. What about in your role in WA? And I've heard you speaking on many occasions. What is it that you would next be talking about in your addresses, and what's the topic that you're working on at the moment?
At the moment, I'm working on the base broadening of the GST and VAT in terms of the e-commerce. So basically, people are not saying that this is base broadening, but what's happening with the platform and also digital services provision, there is an implicit base broadening happening among the OECD member states as well as non-OECD countries. So that's what I'm working on at the moment, and I'll move on to regulatory administration framework with AI, hopefully.
Fantastic. Thanks again, Christina. Thank you, Joni, and thank you, Damian. Absolutely wonderful panel. Great set of knowledge, and I'll hand back to Amy Rose. Thank you, everyone.
Thanks, everyone.
Thank you so much for sharing your time with us. I know your time is expensive, just from experience. Look, we're going to leave it there, and we'll circle back with you all after this. We're generating a report on the global regulatory landscape, and we're going to dig in a little bit to compare and contrast. So your comments after the fact are also welcome. So we'll share that report with you in the meantime. I'm going to love you and leave you and move to the next session on custody. So if for all the attendees who are joining us over there, I'll see you in a moment.
Thanks, Amy Rose. Thanks, David. Thanks, Christina. Thanks, Joni.